I'm John Hanna for CDTV.net here in New York City, and we have Greg Womack, President of Womack Investment Advisors, joining us from Edmond, Oklahoma. Good morning, Greg.
Good morning, John.
How are you today, sir?
Well, I'm doing well despite one less hour of sleep.
Oh, yeah, that is so true. Yep.
Yeah, it was a shortened weekend by 1 hour. So, and so yeah, how's your week?
Well, I literally slept the whole weekend because the fact that I gotta get ready for this 1 hour shift.
Oh,
So, what do you have for us today, sir?
well, we're just looking at last week's markets, John. Pretty rough Tuesday, but the equities markets never, mostly managed to struggle back to even last week. Hurt by the first year's triple-digit one-day downdraft, the Dow was left behind as the other three domestic indexes managed gains, although the S&P barely had a gain. Friday was the third anniversary of the bull market that began on March 9, 2009. So year to date, the Dow Jones is up about 5.8%, NASDAQ around 14.7%, and the S&P roughly 9%. And just touching on some of the major headlines last week, John. Really the big news was, at least overseas, was in Greece, and the largest sovereign debt restructuring on record. 85% of Greek bondholders agreed to voluntarily swap their holdings, which basically allows Greece to invoke collective action clauses to impose the same terms on most of the remaining creditors. So basically, the agreement will cut the country's roughly $200 billion of debt by more than half, and also facilitate a release of the bailout funds that will permit Greece to make bond payments due next week. So they're huge, going on. Finally, they got this thing worked out, it looks like, at least in the short term. However, there's some international swaps and derivatives association said the restructuring qualified as a credit event, basically meaning that the financial institutions who sold the credit default swaps on bonds will have to pay off the roughly $3 billion worth of contracts with bondholders forced by this collective action clauses to accept the deal. So, they're making headway, but still, it's a little bit muddy water at this point. We're looking back home. The U.S. economy added 227,000 new jobs in February, according to the Bureau of Labor Statistics. It was the third straight month in which job growth has exceeded 200,000. But what we have is also the improved employment prospects also prompted more people to re-enter the workforce, which helped keep the unemployment rate at 8.3%. And then also we had China that cut its growth rate for the first time in 8 years, lowering it to 7.5% to 8%. Chinese growth has helped fuel commodities demand in recent years. We also had the U.S. services sector saw its 26th consecutive month of expansion in February, and in orders for all manufactured goods fell in January for the first time in 3 months, according to the Commerce Department. And also we have the Treasury Department sold an additional $6 billion worth shares of American International Group as it continued to unwind the investments made by the Troubled Asset Relief Program. Roughly half of this amount was purchased by AIG itself. And then Harrisburg, Pennsylvania. Remember they filed bankruptcy last year, or at least attempted to file bankruptcy, placed in receivership, said it will miss $5.27 million in municipal bond payments due this Thursday.
Is that million or billion?
Million, excuse me, 5.27 million in municipal bond payments this Thursday. But that's just the interest.
Okay.
And then we have just some news. The Fed's Tuesday announcement will be watched for any discussion of so-called sterilized bond purchases in the future that could help keep long-term interest rates low after Operation Twist expires in June. Manufacturing, retail, and inflation data will also give us a snapshot of the economy. So we had the Federal Open Market Committee announcement on the 13th. Tuesday, we have import-export prices on the 14th, wholesale inflation, internal capital flows, and the Philadelphia Fed Empire State Manufacturing Surveys on the 15th. So Also consumer inflation, industrial production, and then Friday is quadruple witching options expiration. So look for Friday to be a fairly high volume day, as all the major indexes, all in commodities options will be expiring that day. So pretty busy week as far as information. And we'll see if this market can continue to hold. You know, I've talked, John, over the last couple of weeks how the market is really kind of needing that 5 to 10% pullback, and we've yet to see it yet. So we'll see whether it comes this week or not.
There you go. That's Greg Womack, President of Womack Investment Advisors, joining us from Edmond, Oklahoma. And I'm John Hanna for citytv.net here in New York City.